Let's get started. So hi everyone, and thank you for joining us for today's webinar on economic increases and retro pay for members of the CS group. My name is Candice Jazbak, and I'm a member of the mobilization team at our PIPS national office in Ottawa. I'm joined today by Jean-Paul Leduc, PIPS negotiator, and Ryan Campbell, PIPS senior economist. Thanks for joining us today, Jean-Paul and Ryan.
Glad to be here.
Before we begin, we'd like to take some time to respectfully acknowledge that our office, located in the settlement now called Ottawa, is on the unceded, unsurrendered territory of the Algonquin Anishinaabe Nation. Before this land was a city, it was and remains a place for the Algonquin Anishinaabe people, whose presence here reaches back over 8,000 years. As settlers, it's our responsibility to educate ourselves on the history of the First Peoples, to learn how to be respectful of their cultures, to acknowledge their pain and our part in it. This journey of understanding is uncomfortable, but that discomfort is part of our discovering our past and taking responsibility from how we continue to benefit from it. It is our duty to learn, grow, and do better. I'm hopeful that this journey guides all of us to a respectful and harmonious future. At the beginning of our webinars, we also like to provide you with our equity statement, and this clearly outlines our expectations from participants. If you could please take a moment to review the statement, you will find the link in the chat box momentarily. As noted, the Professional Institute of the Public Service of Canada strives to create a climate that is respectful, safe, and inclusive, and where we all feel welcome and valued, and where we're supported to make our contribution and support others to make theirs. We thank you for being part of this inclusive space. And lastly, before I hand things over to Ryan for the presentation, I'll just go over some key information about our platform, Zoom. Due to the size of the group today, we have muted your computers to ensure we will have the best sound quality for everyone participating and for those who will watch later. You can use the chat box to send us a message if you have any questions or technical issues during the webinar. My colleague, Catherine Gagnon, is monitoring the chat box and will be able to help you out. And lastly, this session is being recorded and will be circulated to everyone soon. And with that, I will pass things over to Ryan for the presentation.
Hi, everyone. Thanks for sharing your time with me. So looking at economic increases and retro pay. All right, so training objectives. We put this presentation together because we recognize there is a lot of confusion and distrust with respect to pay, caused over the last couple of years because of Phoenix, and we want to give people some peace of mind, a little bit more certainty. This can be a technical subject, which may seem daunting to some, and we want to provide some tricks and tools to help you feel more comfortable. Ideally, so much so that you may feel comfortable helping others. We're a union. A union at its core is a community of colleagues standing together, helping each other, and it's in this spirit that we put this together. So, start with just some basic principles that we'll be going over. What is implementation? CS just got a new contract, and implementation is the process of putting the new conditions of this collective agreement into effect. The two main parts, that we're going to discuss today is one, your rate of pay will change. And then two, you receive retro pay based on the time that has elapsed since the last contract expired. And that's the bigger piece of the puzzle, the more complicated part. And so we'll be focusing more on that second part today, retro pay. Some basic principles of retro pay. There's this retro pay period that starts when the old contract expires and ends when your salary is adjusted to reflect the new rates of pay. When your salary changes, then this retro amount that you're owed stops accumulating. Each one of you is entitled to a personalized retro amount based on your own personal work history that includes, overtime, acting assignments, things connected to what you actually have done. What qualifies for retro? Generally, compensation that is linked to your annual salary. For example, your base salary, overtime, applicable acting assignments, maternity and parental allowance. We negotiate these salary increases back to the first day of the contract. When these increases are applied retroactively, there's this ripple effect that kind of moves out through all forms of compensation that are connected to that annual salary. Generally, what doesn't qualify for retro is anything or clauses in your collective agreement that are defined by a fixed amount of money. Common examples are shift premiums that are a fixed dollar amount per hour, or allowances that are a lump sum as opposed to being a percentage of your salary. So if you earned a shift premium that was $1 an hour, it's still going to be $1 an hour retroactively. If you qualify for an allowance that's, say, $2,000 annually, it's still going to be $2,000 annually. You have to negotiate the changes in those each individual clauses. In each one of those individual clauses, individually, and generally when that happens, it's on a go forward basis after implementation. Fortunate enough to offer an unexpected timeline of when this stuff is going to happen. So we expect on your next paycheck, the first phase will happen. You'll see that your salary should reflect the new higher salary that was negotiated by your bargaining team, and then once that the retro period is defined, then they can start calculating how much retro you're owed, and we expect that to happen in May, and that'll be for the period between the first day of the contract, December 22nd, 2018, and the effective date of that salary change, which we expect to be March 31st, 2021. And then in summer, with this contract, we expect you're going to receive a $500 implementation payment if you're eligible. And the eligibility criteria for that is quite low. It's just if you spent a day in the bargaining unit after the first day of the contract and before the date of signing, which was February 26, 2021. So if you worked as a CS in between those days, there's a very good chance that you'll be eligible for that $500 payment. So retro-pay in Phoenix, really this is the reason why we're putting this together. It's this, implementation and retro is a big operation. We want to, try to put people's mind at ease as much as possible. So the background for this issue is that, for many years there was a well-established process for implementation that was built on the employees trusting the employer to make these to do this properly. But in the last round of negotiation, implementation went very poorly as a result of Phoenix, so badly, in fact, that the employer is still working out pay problems caused by the last set of terms that were implemented in the last contract. So for this contract, we had to actively negotiate a process that allows us to work around Phoenix. We wanted to get a deal. We did not want ongoing Phoenix problems to prevent us from coming to a deal. So in order to do that, we had to come up with an alternative approach. The details are long and complicated, but if you want to look at them, they are available. They will be available in a memorandum of understanding that will be in the back of your new contract. So highlights of this new alternative implementation process is that we agreed to give the employer more time if they needed it, 180 days instead of the usual 90 days. And for this accommodation, all eligible members receive, as mentioned, this $500 payment in recognition of the extended timeline, regardless of how long it actually takes. As it stands, the payment is expected to be within the original 90 days of signing, but you're still entitled to that $500 payment. During the negotiation, we were less concerned about the delay and more concerned about the penalty. We really wanted the employer to get it right, and we wanted timelines and promises to be meaningful. If they needed more time, we could tolerate that, but we wanted to make sure that it would come with a penalty. And so in addition to the $500, if implementation of the new agreement is delayed beyond 180 days, there's another set of penalties that you may be owed by the employer. So day 181, an additional $50, and $50 for every subsequent 90 days where they haven't met their requirements for implementation. More highlights, hopefully you'll be happy to know that Phoenix will not be doing the calculations. It's a different methodology, different system will be used. Lump sum payments will be paid out by Phoenix, but Phoenix won't be responsible for doing calculations it can't handle, the operations that caused everything to go haywire last time. And then also implementation may be more gradual and staggered. They have, this process has been used for many people within the public service, over 100, 200,000 people. And the implementation process has been improved for each contract that they've implemented. But there's still no guarantee that you will be paid everything that you're owed all at once. The employer has 180 days, and in past experience, we've seen that there's a methodical approach based on how easy or complicated each individual case is, and they have the ability to use that time if they need it. So impact of Phoenix. So this is, Phoenix is the elephant in the room, right? And it remains an obstacle. There is still this big backlog, and there's no guarantee that the backlog will be cleared up within this 180 days. And so the impact for retro is that, everybody is owed this personalized, precise amount based on their own personal situation. And don't get me wrong, you are still owed every penny of that, personal amount. But know that amount can't be reconciled perfectly for everyone until all Phoenix problems are fixed, and that's still a big job. So given this context, the challenge became, how do we clearly define an amount that the employer is on the hook for within that 180 days, and how do we make them accountable for that amount? And so what we did, the compromise that we struck, was that the amount of retro owed within that time period will be determined by a snapshot of your historical salary record on a specific day, not by Phoenix. Phoenix won't be, reprocessing every single pay operation. They take a record, they parse out some clean, trackable data and determine what's owed by applying percentages to your historical salary record. So it's a more stable, simpler operation, and is proven to be effective in the implementation of other contracts. The weakness, I'll address it head on, is that there may be inaccuracies in the historical salary record because of the Phoenix backlog. But once these inaccuracies are corrected, retro pay will be accounted for and paid to you. But in this situation, there's no guarantee that it will be within the 180 days, and it may not be subject to the additional $50 penalties. And so that's why that $500 penalty is up front was so important, because yes, it's for the longer timeline, but also to smooth over some of these concerns over these issues. So the employer owes retro on everything. In the current context, there was no perfect solution, but for most people, the employer is expected to provide the vast majority of what's owed to them within 180 days. And later this spring, you'll see that almost all of you will receive almost all of what's owed. And as we'll get to later, you'll also be given an opportunity to kind of see where that payment comes from and track what's been paid. And if it's not there, you'll have a better idea of why it's not there. And the last thing is that to keep in mind in the context of all of this is that there's a separate process for recuperating out-of-pocket expenses and damages related to Phoenix. We had to separate these two issues into kind of two pots of money, one kind of clean set related to retro, and then one messier set of money related to Phoenix. And so if you have serious pay problems related to Phoenix, retro is only a small percentage of that. So it's more important that when you have a big Phoenix related problem, you look for damages, penalties, and claims through the Phoenix process. So everything that's been discussed so far has been covered in more detail in the FAQ. I'm going to stop to answer a few questions now. The bulk of what we're going to discuss next is, one, to give you an idea of how to calculate a rough estimate of the retro that you're owed, and two, to look at kind of the resources that will be available to you if you want to be more precise.
Okay, great. Thanks, Ryan. So we are going to open things up for a few questions now. You can ask your questions by typing them into the chat box, and we'll pose them to Ryan and to John Paul. I'll remind folks that there are a lot of folks on today's webinar, so we will do our best to get to as many questions as possible. But if we don't get the chance to get to yours, you can email us at bettertogether@pips.ca, and we will get that answer for you. And we will have a second question period a little bit later in the session. So I am just taking a look to see at what questions we'll be coming up with for folks. All right, so my first question comes from Chris. Will the new pay rates reflect multiple departments? I have been with 2 departments, always as a CS, and performed acting work in both.
Yeah, as far as I know, that kind of transition should be seamless. As long as the acting assignments, the one caveat I would say is that if there were any acting assignments that were outside of the bargaining unit. So if it was, it should be fairly seamless if the acting assignment was within the CS group, assuming that the pay operations have been, logged properly. But if it's outside in a different if it falls under a different collective agreement, you're still owed retro for those amounts, but it may not be as seamless if it's outside the CS group.
Okay, that's helpful. All right, the next question comes from Oliver, and I see there are lots of folks asking this question. When will the new contract be posted and available online? Do we have that timeline? I'm not sure.
I know it should be soon. JP, do you have any?
Yes, I've been trying to push Treasury Board a lot about this, and they've advised me 2 weeks ago that they were saying about in 3 weeks because of the IT issues of the way it has to be posted. So it should be out and posted within the next week. I'll be pushing Treasury Board, so within 7 or 10 days, it should be on the Treasury Board website and on our PIPS website.
Perfect, that's great. My next question comes from Juan. With the lump sum retro pay, do I end up paying higher tax brackets this year as compared to the salary increase evenly earned in each year?
We have to be very careful about tax advice. There are ways to minimize your tax situation. I can't speculate. Each individual's own tax situation is unique to them, and we have to be careful about providing that kind of advice. But there are certainly, you talk to a financial planner, talk to an accountant, and there are ways to make sure that you get the most out of the big lump sum payment.
Right, but that lump sum payment is considered income, I would assume.
It is certainly income. It's certainly taxable. There's no way to get around that. But in terms of whether or not you're getting a more severe tax burden because you're getting it in one lump sum this year as opposed to spread out over 3 years, I mean that depends on your own personal situation. The deduction may be larger for that first payment because of it triggers it seems as if you're in a higher tax bracket than you normally are, but over the course of the year there are things that you can do to moderate that.
Right, that makes sense. Okay, my next question comes from Nick. And I think you may have covered this earlier. Do we have a sense of when that $500 payment is expected? Yeah. I mean, I think we weren't 100% sure. That we got an indication that there's more certainty about the first 2 phases, and that there wasn't 100% certainty about the last day, but it should be in the summer, I think. Yeah. So it's July or August is the best that I can give you right now. All right. Nope, that sounds good to me. The next question is coming from a lot of folks, and I know we were getting this via email ahead of the session as well. There was also an email that came out from Debbie about an additional $1,000 related to Phoenix pay issues. How is that connected to this retro pay $500, or is it something separate?
It is a completely separate amount. Like Phoenix was the big obstacle, and so we had to cut out this set of money that the employer was on the hook for that came under the category of retro. So this $500 is just for the retro. It's just for any accommodations that are made throughout this retro process. Everything else related to Phoenix, there's a separate process. So this was the $1,000 was, so we negotiated the deal initially. but also negotiated what's called we refer to internally as a Me Too clause. So if anybody else gets something better, we get that as well. It's not always simple to apply a different contract, like to look at all the different clauses and figure out what the overall difference is. So there was a separate negotiation. We figured it out, and so it was determined that for the late, so that there's an additional $1,000, and then there's also a floor. So everyone got. That's the $1,000 in addition to the up to 5 days of vacation time. But that was previously negotiated and announced, and so in addition to the $1,000, there's a floor. So the minimum amount that a day of vacation can count for is $300. So if you're in a situation where your salary was less than $78,264, that means your daily salary is $300 or less. You're also entitled to a top up from whatever you were earning and $300. So $1,000 for everybody, and then that potential top up for others.
Maybe, Candice, I can just add to that there's two different negotiation part of this, so people understand. There's a $500 late implementation that was negotiated with your collective agreement. Then the $1,000 is the Me Too catch-up clause that was negotiated outside of this current collective agreement, which was for the Phoenix fiasco, which was the 5 days plus the Me Too clause of $1,000, which is outside of this collective agreement. So the $500 is separate than the $1,000. So they're two completely different things. So just to make people understand, to clarify that part.
Perfect. That's really helpful. Thanks to you both for that. My next question comes from Brandon. For the last collective agreement, there was no physical copy. Will that be the same for this time around? Will it only be online?
JP?
Yeah, I can answer that one. Again, yes, there's not going to be any physical copy that's going to be distributed, but at the end of the day, you can always print it at your work location. We've told the employer that if they, they're not going to be giving out the hard copies. If it's requested, we can ask the employer for a certain amount of copies. People that are interested in getting them, we can, have a discussion with the Treasury Board and say we want so many copies. If that's the case, just forward your to Better Together, and we'll tabulate that and see how many collective agreements we can get printed outside of this for the members. I think it's always an issue to people like still hard to have hard copies, but we'll try to just take the first step and at least get it posted so everybody has a copy of it, at least electronically, and then we'll work on the hard copies.
Okay, that's great. Thank you. All right, so my last question for this section, and I'll remind folks that we will have another question period later on. So if we haven't gotten to your question yet, don't sweat it. Or if you're wondering about things, chances are Ryan is going to cover it in the next part of the presentation. All right, so this last question, and I think we've sort of already addressed it, but I'm going to pose it again because there are a lot of folks asking. So this comes from Pauline specifically. Is it possible to have the employer deposit the retro pay directly into RRSPs so that you can avoid those potential higher taxes?
Maybe, Ryan, I can answer that one because that was a question that was sent to me directly, which I directly sent to the negotiator and asked her the question, which was an ex-employee of CRA, by the way, that negotiates for the CS now. So the question, she says, at a first glance, and my answer was no, because it needs to be a human rights settlement to be not taxable or to be transferred directly in RSP. So the answer is no. From the Treasury Board, you cannot transfer directly into an RSP, but like you say, like Ryan says, as a financial advisor, you can take that money out and then you yourself put it in RSPs, but they cannot be transferred directly. So the answer is no, it cannot be transferred. We wish we could, but it can't be at this point, like certain parts of the severance, I think, was.
Okay, that's perfect. Thank you very much for that information. All right, so we're going to wrap up questions for now, but don't worry, we will have another question period later in the session. In the meantime, if you have questions that are sort of percolating in your mind, you can enter them into the chat box and we will queue them up. And with that, I will hand things back to Ryan.
All right, let's go. Okay, so yeah, understanding the retro payments, and we'll start by providing you an approach to come up with a rough estimate of what you're owed. If so inclined, you can use a spreadsheet and get really accurate, or alternatively, come up with a pretty good but rough estimate with simple tools like a piece of paper and the calculator on your phone. Here's, let me just move that. So to start, you start with the percentages that were probably announced that you're familiar with from this most recent collective agreement negotiated by your bargaining team. So for the first day of the contract, December 22nd, 2018, a 2% increase with a 0.8% wage adjustment. The first day of the second year of the contract in 2019, another 2% increase with a 0.2% wage adjustment, and then this past December 22nd, the final 1.5% economic increase. For the purpose of calculating retro, what you need is the amounts with compounding. And so if it's a cumulative process. So if you look for the impact of compounding in the first year is 2.816, and then you keep going in year two, the amount with compounding is 5.082%, and then year three with compounding the amount is 6.658. And here's a specific example. If you want to come up with a rough estimate, it highlights how personalized this calculation is to you. It's determined by everything that is specific to your personal situation. So to provide an example, we have to create this fictional person. And so in this case, we have a CS2 that was earning the maximum salary as of December 21st, 2018. So this is the last day of the last collective agreement, and so this is the full amount from the pay lines of that contract before tax and deductions. And so yes, first day of the new agreement is December 22nd, 2018. Their salary was adjusted. You have to define the retro period. So the salary was adjusted based on the new CS collective agreement effective March 31st, 2021, which is what will be the case for most of you, that the effective date of the salary changes will be March 31st, 2021. You'll receive it on this pay period, but it's in arrears. This individual worked continuously throughout this whole retro period. No interruptions, and for the purpose of simplicity, they didn't receive any compensation over and above their base salary. So no OT or acting, but you can kind of add that on fairly easily. And then you break it up into three periods. Period one is the first year of the collective agreement. Period two is the second year of the collective agreement, and period three is the first day of the third year of the collective agreement to the time that the salary is adjusted. And then the full retro period is defined, so like a prorated amount of a year. And then so the approach for calculating the amount of retro involves breaking your earnings into those three periods. And for each period, you estimate your salary, and then you apply the appropriate percentages based on the amounts that I've already listed. So for each year, you have a and so if you want to figure out what the earnings are for each year, the simplest way, period one is a full year. So just, use the full year's salary here for the individual, this fictitious individual that we've created. For period two is also a full year. So use the same salary. And then for period three, it's a prorated amount. It's equal to 72 work days, and so we figured out what the salary is for this person for 72 work days. And then to tie it together, it's not as that complicated of an operation. It's just a number multiplied by a percentage for period one, the salary multiplied by the appropriate percentage for period one, the salary multiplied by the appropriate percentage for period two, and then the prorated version of the salary multiplied by the appropriate percentage for period three. And then you add those three up, and you get a pretty good estimate of what the retro would be for that individual. If you want to use this approach and try to be accurate, you'll have access to this deck after the presentation is over. We'll send it out. And so here are some helpful definitions. If you're close but not quite there, it may be because certain things like a weekly salary is defined in the collective agreement, and so it'll give you an opportunity to be more precise with what you're actually owed per day. Yeah, so that will be available to you. So the next section is we're going to look at the web application view page. So we did a rough estimate. This may be enough for you. You may see that calculate that what I received is approximately what the amount that I was paid, and that may be enough. But if you want to be more exact, I wouldn't recommend trying to figure out the exact amount on a spreadsheet. I think what's better is to use the tools that are available to you rather than trying to conjure this perfect number out of thin air. So first step, how you'll be notified of when you receive retro payments. Your electronic pay stubs look something like this. You will see normal amounts of pay that will show up on your biweekly stub. Your basic pay, your bilingual allowance. And then if you receive retro payments, you'll see these additional line items. You can identify them as being related to retro because they generally have retro in the name. And fortunately, if you want to know where these amounts come from, they will correspond to a detailed summary that you have access to. And so, each line of your pay stub will correspond to a more, detailed retro details page. So if you get the amount and you have questions about it and you want to call the pay center, or you have questions for the employer's compensation people, they're probably going to look at this page. So it's probably a good practice for you to look there first. Make your specific observations and target your questions before you put them to the compensation people. I imagine it'll save time and make the conversation more productive. And so if you go there, here is what you'll see. And so the good thing about it is that it's not a perfectly readable set of information, but at the very least, the number on the pay stub is not just a black box. It's not just this like aggregation of numbers, and you have to try to figure it out with all the deductions and stuff. And so all the information that goes into the payment will be accessible to you, and it's organized to show how each part of the retro payment is calculated. So you'll see here there are some dates. Most of these dates will correspond to a normal pay period, and you can see the hours. So 75 hours here correspond to a normal pay period. You will see a percentage here. So this is the percentage, and you can look at the dates and see, oh, is this the right percentage for the the right year of the collective agreement? And then lastly, you'll see this little amount, which is the amount of retro you're owed for this period of time. And you can look at this information and check to see if it makes sense. If all the inputs are good, you can be more confident that the payment is good. And if it's not good, if the inputs are incorrect or something is missing, at the very least, it's easier to flag the problem. So I'm going to just dive a little bit deeper into this to help you interpret, how to read this page. So if you look at line A here, this first line up here. So this is like a normal pay period for this year of the collective agreement. So the dates correspond. The dates correspond with a normal 2-week period. The hours correspond with a normal 2-week pay period. The percentage is correct, and the payment is correct based on the salary of this individual. We're still using a CS2 at the max as the example. And you'll see that the earning figure is part of a list of numbers that are the same. So look at this number is the same as in a list of numbers that are the exact same, because you go months or even a full year where the amount of retro owed for each pay period is the same. So you want to see those patterns. Then in line B, over here, down here, you see that a change has happened. And in this example, the change is that the final economic increase has been applied. And so the first thing to look at, these earnings amounts are different. But you can look at the other inputs and get an explanation for why they're different. And so you can see that the pay period isn't 75 hours. It's broken up into 2 different periods. In this case, they do still add up to 75, but they may be different based on your personal situation. the reason for it is because the last economic increase is applied on December 22nd, 2020. And so the percentage changes of what's owed for every hour worked, the amount of retro owed is changed. So that's why, there had to be some sort of recognition of this change happening, and it's visible in this view page. And then you go to line C, and so this is the new pattern for a normal pay period based on this higher percentage. So it's, you see, okay, so 75-hour work week, new higher percentage, and then, this number is the same as a sequence of numbers. And, and you can, at least have this tool available to help track or understand why this, big retro payment is what it is. And so, it's imperfect. It's not, ideal, but at least now you have a resource available to you to double check. You can look at things like, do the dates make sense? They're organized by fiscal year, years of the contracts, and dates relevant to you, like, promotions or acting assignments. Do the days cover the entire retro period? Is the salary correct? If your salary changed during the period, can you see this changed? So you can look at this page and reconcile some of these issues. And so yeah, so we're gonna as soon as possible jump into another round of questions, but kind of try to anticipate a few that you might have, and so we'll do some kind of obvious troubleshooting here. So first, how do I use the information provided to verify my retro payment? So, again, looking at this view page, and we're going to zoom in on some, key information that is provided. It doesn't provide all the information, but it provides enough to, give you a sense of whether or not it's correct. And so from there, you can find your salary information in the collective agreement and use it to verify the amount listed. You should have an idea of what what you're owed or what you should be paid according to the collective agreement, what step you're on, what classification you are, etc. And so you'll see here that this is a very important date, right? Because you've been paid based on these salary rates for the last 3+ years. And so a version of this pay scale is in the old collective agreement, which is up now, and it will also be in the new collective agreement. And so, you add this little piece of information that based on your personal situation, and you add it and you incorporate it with the information that's available on the view page, the zoomed in part of that kind of spreadsheet that we're looking at, and you have this relatively straightforward equation that you can plug all the numbers into and check to see if the number makes sense. So here in the collective agreement you have the weekly rate of pay, because we're looking at most of the time these payments are connected to biweekly pay periods. You times that by 2, you times it by the appropriate percentage, and then it should equal the appropriate CBA earnings. And if you look in this example, it works out well. If you're doing this on your own, it can be off by a few pennies based on the way you've rounded it or which one of these numbers you use. Don't worry about a few pennies, but if it's dollars, you may be being paid based on a different step. And if you're supposed to be at one step and not another, that's a good thing to bring up at the pay center. How do I know if something's missing? Again, something's not there. It's missing. You didn't. If you receive pay and it's not reflected in that sheet, then it's something that you're still going to be owed for. The dates connected to the payment should cover the entire retro period, day 1 of the new contract to the day your salary was adjusted. All applicable compensation should be visible. Base salary, overtime, applicable acting assignments, maternity, parental allowance. You may be notified if there's a particularly complicated case. The employer may notify you, telling you, hey, we're not going to be able to do this on time. And then if it goes past 180 days, then then you'll be eligible for additional penalties. Next issue, I looked at my salary record and discovered that there's a new problem with my pay. So if this is a new problem, you have to go through the standard process. You have to, notify your manager and fill out a Phoenix feedback form. We have a Phoenix team that's at your service, willing to help you through the process. And when the mistake is corrected, any retroactive amounts, will be accounted for and paid. I wasn't being paid properly during the retro period, and I've already flagged the problem. So we've kind of already touched on this, but this is kind of an unfortunate situation. So within the 180 days, the employer owes you retro based on this snapshot at a particular time. So that's what you're owed within the 180 days. If you're not being paid correctly, obviously the historical salary record will be inaccurate. So when the mistake is corrected in Phoenix, you will get retro on that amount, but it may not be within the 180 days. And then the last one, I received payments. I looked at my retro details page, but I still have questions and concerns. And so, first, the first person to go to is generally the employer. Pay is one of their primary responsibilities. Hopefully you can use the information available to you to target your questions better and make the conversation more productive. But the reality is that they have access to the relevant information that we don't have. If you still have ongoing issues, of course, feel free to contact a PIP steward or an ERO. If you're still concerned after speaking with the employer, or if you don't agree with the explanation you received and you want to hear an explanation from somebody who has a legal and ethical responsibility to look out for your best interest, that's what we're here for. And so that's it for me, and we'll open it up for questions for the rest of the go.
Perfect. Thanks, Ryan and John Paul. So we're going to open things up for a few questions now. Once again, you can ask your questions by typing them into the chat box, and we will pose them to Ryan and John Paul. I'll remind folks once again that there are a lot of folks on today's webinar, so we'll do our best to get to as many questions as possible. But if we don't get a chance to answer yours, you can email us at bettertogether@pips.ca, and we will get that answer for you. All right, so my first question comes from Daniel, and they note that they checked the retro details section just yesterday and they didn't see anything there. Is this information not online yet? Yeah,
so that amount, I don't expect it. It should be, we expect the lump sum retro payment to happen in mid-May. And so, it's not really going to be relevant until you have that until you receive that retro payment or don't, I guess. So, it corresponds to a payment, so you see it on your pay stub, and then it should be available to you on the retro details page.
Got it. Okay. My next question comes from IZ, and they're asking, if we received acting pay for a period, would we separate the periods of base and acting by number of days? And then do we calculate those things separately and add them together? How would you recommend considering acting pay in your calculation?
So, I mean, if you're doing an estimate for yourself, just like eyeball it, just a rough estimate, let's say you think like, oh, for a week, that's $300 additional pay, for example, and because the difference in retro isn't the $300, it's just the percentage of the $300. It's like $20 or something. So you can be off by if you're off by $1,000, you're only going to be off by $50 of retro. So for rough estimates, eyeballing it is not the worst thing. For the if you're looking in the retro details page, it may be, it'll either be, it should be visible. I don't know exactly how it's going to be visible. It's either going to be a separate independent line item, or it'll just be visible as, for that week of pay, you should see that your base pay is determined by a higher rate. So, there should be something visible. If you know the dates that you were acting, it's either going to be, an additional amount, like a line item that says something like retro on acting pay, current fiscal year, previous fiscal year, or it'll be, it'll adjust the amount of base pay. I don't know which one it'll be. They keep changing the process, but in the past it was a separate line item.
Okay, that's helpful. My next question comes from Sylvain. And they're asking for those who are retiring this year, and I will add for those who are already retired, how can they expect to receive their retro pay?
I mean, you're still owed retro pay if you I mean, you're still owed retro pay for any applicable time that's covered by the collective agreement. That's not in dispute. Everything is pensionable. That's not in dispute in the same way that it was before. The tricky thing, once you retire, you may not have access to the retro details page, but if that's the case, you can contact the pay center, and they should be able to send you they'll be able to send you I think they'll even mail it to you, but they can send you a secure version of that view page, and you can and you should have access to the same information that everyone else does.
In that same line, does retro pay have an impact on a member's best 5 years when they're thinking about their pension calculation?
Yeah. It's I mean, I'm not the expert, but my understanding that's all determined by the yearly amounts listed in your collective agreement for all for those purposes. You look at your collective agreement, what was your annual salary for that year, based on the new contract, and that's going to be what's determined. That's going to be how it impacts your best 5 years in the same way that it was before.
Perfect. My next question comes from Chris. The PIPS webpage states that the new salary will be reflected in current paychecks in April. Is this expected? Could you just review sort of that timeline that you went over?
Sure. So I mean, this is like, I'll reiterate that the employer does have 180 days, but they gave us this timeline. We expect them to follow it. So yeah, so the next pay, I believe it's the 14th or 13th, and so that is when it should show up on most. I expect on most people's pay will be adjusted because it'll be you have access to the old contract, so everyone should expect that their salaries will be at least 6.658% higher listed on your next salary than they were on your last paycheck. And just to keep in mind that because pay is a few weeks in arrears, the effective date of that change is actually March 31st, so that's when the retro period closes. But we expect the next paycheck you should see the higher salaries. It's not going to be the whole retro payment. It'll just be now you're making the salary that was determined by the most recent round of negotiations.
Okay. My next question comes from Christian. So when we're talking about overtime, they're assuming that it will not apply if they took their overtime as time in lieu. Is that right?
Yeah. So I mean, in that sense, it's just like time is time, right? Your time, in a notional sense, has become more valuable. So if you took time during that period, it's just now that time is more valuable. So if you cash it out, there may be adjustment, but yeah, just there's no extra time. The time is this universal kind of equalizer.
Okay. And I'll just remind folks that if you do have questions, you can send them in the chat. We are sort of winding down our question period, but if you have one that we haven't gotten to yet, just please pop it in there. So my next question comes from Elizabeth. If I do have an issue, how do I find my steward or ERO?
Yeah, so it's I mean, there's a find a steward page on the PIPS website. You can and I mean, it's always best to find. I think just normal process is good to just check to see what your nearest steward is, and then if that's not productive, you can just call PIPS and they'll put you in touch with an ERO based on which department you work in.
Yeah, and I'd like to add also that on the website, your executive, which is your CS executive,
good point. Yeah.
Could be very helpful in finding exactly the closest steward or who could work on your file.
And they might be able to answer your they receive a lot of questions. They're very knowledgeable, and they might be able to answer your question off the top of their head.
Yeah.
All right. My next question comes from Vivian, and they're asking, if I'm on long-term disability, how does retro pay work in that case?
Sure. So, I mean, if specific questions, please, send an email and we'll put you through to the benefits team. But in general, so the day that you are officially, you are entitled to retro based on this agreement up until the point that you officially go on to long-term disability. So, and then after that, it's a separate process. So after the day that you're officially being paid by long-term disability, it's a separate process. There are automatic cost of living adjustments within the long-term disability. So it's separate, but so before the day you're officially on long-term disability, you're entitled to retro, as we've discussed here. After that point, there are annual cost of living adjustments, but it's a separate process. And if you have specific questions about your specific case, we have a benefits team that is, wonderful, very helpful to help with your specific questions.
All right. My next question comes from Marco, and they're asking, just to confirm, because I think folks are, we hear about this 180 days, and then we also see that our timelines are quicker. So even if we get paid before that 180-day deadline, do we still get the $500 in Phoenix compensation?
Yeah, $500 is for everybody. I guess the only, I didn't really touch on it in the presentation. The only people who don't get the $500, one, people who started after February 26th, which is the date of signing, or I guess who retired before the first day of the contract, although none of this would apply to them. But also, if you moved from one collective agreement to another and you already received this $500 late implementation payment from another collective agreement, in that case you can't get two, you can only get one. But other than that, everybody just gets it. Doesn't matter. Like it wasn't it's easy to kind of line it up to the extended timeline, but it's actually kind of just to deal with all of a couple of the little hassles that are related to the ongoing Phoenix problems and how they affect just implementation and retro pay. And so everybody just gets it up front.
Okay, that's great. We're still getting a lot of questions about that $1,000 Phoenix payment, which we know is separate from this, but I think we sent an email out about that around the same time we sent an email about these webinars. So there's a bit of confusion. Either JP or Ryan, can one of you sort of repeat the difference between those two things?
Sure. Sorry, I want to start by just saying that it's because I'm glad somebody else brought it up, because I feel like I may have misrepresented the amount. So it's a maximum of $1,000, in new money, and it's broken up into different years, in terms of, so if you're newer, then you may not be entitled to the full $1,000, but if you were around in 2016-17, it's $400, and then $200 for the following 3 years. But yeah, so this was, everything that we've talked about is kind of more connected to the terms and conditions of the CS collective agreement. And because of the $500 is connected to late implementation for the CSs. Other people got it, but this is just in your collective agreement, and the terms were defined by, your solidified by the collective bargaining process for the CS group. Phoenix is a much broader, bigger issue. So there was this separate central damages and penalties process, and so the new payment, the new adjustment that was announced was a result of this separate damages and penalty process that everybody in the federal public service had access to, or all PIPS members had access to, for some of the different challenges related to Phoenix. So this $500 is completely separate from any of the announcements related exclusively to Phoenix, and it's really by design to parse out this kind of clean data set to determine your retro, and then deal with this messy Phoenix business, on the side.
All right. Okay, so my last question comes from AM, and they're asking, what about parental leave? Will the increase in salary be reflected in the top up if I'm in the middle of my parental leave?
Yeah, absolutely. So it's 90 to 93% of your salary, and that's a new salary. So I don't know if they fixed it. So this was actually an issue where they required a little bit of extra time for some other PIPS members. They may have fixed it. They may, but keep an eye on it. So what they do is that what they did last time was that they give you a payment. So you're owed an amount from EI or QPIP, and then the employer tops it up with the allowance. And so what they did is so in that first big run of retro calculation, they give you an amount based on just applying the percentages to the parental allowance. And so if you go into the numbers, you'll know that just applying the percentage to the retro allowance isn't the same as 93% of your new salary. So it's most of it. So in some cases you'd end up being a few $100s short. So in the last group that was implemented, people in this situation, so like they may have been a few $100s short on what they were owed in retro within the 180 days, but they received it. They for the most part, they've received, they received the, let's say a $200, $300 top up. And then they also received, because it actually took a while, but they received a $200 top up and then a $150 penalty, or they're owed a $150 penalty because that operation was not done within the 180 days. So you're definitely owed the amount. I'm hopeful that it will be done, that they figured it out and it can be done in the first run. If it's not, it's definitely something that qualifies for the additional $50 penalties if it's not done within 180 days.
Okay. All right. And with that, we've come to the end of our session. I'm very conscious of time, and folks are, I'm sure, eager to get back to work or whatever they're doing this afternoon. So thank you again for joining us. I want to give a big thank you to Jean-Paul and to Ryan for their expertise, and to Catherine for supporting our chat box and during our question period. We had a lot of awesome questions today, and I hope that folks are leaving feeling a little bit more confident in their understanding of retro pay and their new collective agreement. If you have any outstanding questions about this presentation or anything related to your new collective agreement, please send us an email to bettertogether@pips.ca. And I know that my colleague Catherine has put that in the chat box for you. And we can make sure that your question is directed to the right member of our team for more information. Once again, the session was recorded and it will be available on our website soon. So you will have access to everything we said today to do your calculations. Once again, thank you for your time and have a wonderful day.